Good morning traders, this is Sunday the 17th of November and today we're going to look at Euro Pound, the outlook for the following 6 months to a year. And in front of us we have the market scope trading chart for Euro Pound, and we're looking at the monthly chart time frame. In front of us we have the perfect combination of technicals, and the descending channel that we see here is actually very clearly shaped. So we start here in the early months of 2009 and we come down here to August of 2013, having this top of the channel. Down below we have the bottom here. Now we obviously have different situations depending on the fundamentals as well, but just on a very general note, the top here we see at about 95, 0.95, and the bottom here is at about 0.82. Okay, so the difference is 1000, and if we measure it actually from here, okay, from here to here, 1270 odd pips. Let's make it 1300 pips. And just for the argument's sake, so this range is basically what we're looking at. Of course, it may change slightly, but roughly it's 1200 here. So depending how tight you make your channel, but so it's over 1000 pips. So half of it is 500, and if you imagine a line running through this, an internal support or resistance line, if you like, an internal trend line, it will come down here. And so roughly what we've done here is we've looked at the bigger picture. So we've gone for a wider outlook for the Euro Pound, and this is going back all the way to the maximum data allowed here, which is early 90s, 94, 95, and we've looked at basically what happened back here in 95, 96, and what we discovered was that is a range of about 500 pips. And this is the top at about 0.88, and this is the bottom at about 0.83. So again, we're looking at about 500 pips. And this range was basically cast for about 18 months and broken then all the way down here to 0.57, which is very, very low by current standards. But so we can see that from the from about 95 to 2013, that's 18 years, we've come back full circle. And this is where we are now, where I'm just running the mouse pointer, is basically within this red line here at the bottom and the green line. So we come down to this range again of 500 pips. We've been here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 11 months, give or take a month. The first candle is actually through from much further below, so let's make it 10 months. We've been around this area. Now, of course, if we carried on for 18 months, that will take us to about June. Okay, it will take us to about June of next year before maybe breaking to the downside, which is what we're expecting given the trend that's forming down the down channel here. But of course there could be a break to the upside as well. This channel, interestingly, has been tested for once. This is the start, so once here, twice, and then a third and possibly a fourth time. So 4 times it's been tested from its inception in 2009, so 4 years, and we come down to the 1, 2, 3, 4th test, and now we've sort of bounced off it. Now if we look at the previous sort of descent we had after this near bounce here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months before we got to the bottom of the channel. So it tested the top and then back to the bottom and then back up. So a year, it's taken a year to come down. So from this bounce here, which was, as you can see at the bottom, August of last year, we probably expect to be August of next year before we head down to the next bounce. However, we've actually looked at this and decided to go for April of next year, because if you measure the distance between these two and these two and make an average, okay, you end up with April of 2014. Okay, so essentially it's sort of a medium average of these two and the distance measured in months, and then you end up with April 2014 as a target for retesting the bottom of this channel. Of course, this is pure speculation, so anything can happen, but this line is sort of pointing down to say that we may break this 500 pip range sooner perhaps, and get here in April rather than August. But that again all depends on many things. Certainly the fundamental outlook at the moment is that the euro is under pressure because of the rate cut, and which is not significantly going to impact on the eurozone economy necessarily, but certainly as a measure. And also there's consideration of further stimulus efforts potentially being implemented, and so all these pressures on the euro at the moment signify further pressure to the downside, whereas the pound has a favourable outlook. So we're looking at obviously different scenarios fundamentally, but technically speaking, this is what we're looking at, this sort of range of over 1,000 pips. And the other thing to actually keep in mind is that if we expand this a little bit, we can see a couple of things going on. This 500 pip range is bounded at the top by a line which coincides with Fibonacci level. So if we look at the range here from this bottom at 0.79 roughly, 78.7, all the way up to here, which is 0.97. Essentially we're going from this swing high, so from 2008 November to the January 2009. Okay, this is very rapid. During the market crash of 2008, we have this huge rise within the month, and so from there essentially to here, the Fibonacci retracements are traced here. So we have the 38, the 50 and the 61. So the 50 retracement line, as you can see, coincides with the green boundary that we traced earlier for this 500 pip range from the mid-90s, and these two lines coincide. So this is quite a powerful level, we might say, and certainly here it works. It bounds back, sends the euro down and up, and again here you can see it being tested again. So essentially it's testing this move, and then it forces it and it keeps it down here again and here again. So essentially this down trend line at the top of the channel is tested here, but what actually is being tested here really is this fib retracement level, okay, and the 500 pip range. So this is what's being tested here essentially. So we have this powerful level holding. We also have this other level which is holding at the moment, and this is the other, it's the 38 fib from this. Further down here we have other levels which go further back. So if we just squeeze this in, we have this descend essentially in 96 down to 97, okay, from 0.86 to about 0.64, huge, 1,200 pips, and this creates these three levels, okay. So these in purple are older, and we can see here that the April bottom of the channel here, this target that we've set, is roughly coinciding with this 0.50 level. So obviously double trouble here, weak force on the downside will push but this will suit fine, because by this time we'll be at 0.75, so we'll come down all the way from here, 900 pips. Okay, this is quite a huge profit, so it would be fantastic if we got to this point. I'd be very happy indeed. And this is basically the 0.50. The 0.61 here, okay, the 0.61 here from that earlier range, is this fib level is actually coinciding with the huge push here. So this is also a significant level, okay, and here you can see it holding. Okay, the wick comes down to the bottom of this channel that we set. We've drawn the trend line based on the wick but the actual body of the candle stops dead here on the 61 fib retracement. Very powerful level. So this level here and this level here is very powerful. So essentially we bound from here to here and down. So if you break this level, we're going to the next level down, the 0.50, and then potentially, say potentially, always with a bit of caution, may bounce back up, and this will be the last level of these three, okay, and then back down to the next level, and so on, and then redraw the levels as we go. But this is essentially the outlook. So keep an eye out for further developments. At the moment, obviously, if we went a little bit closer to say an 8-hour chart, we'd see that we are on a sell pressure. Okay, so at the moment we have, of course, the weekend stop, but the last candle was a red candle here, and obviously we haven't moved as much as during the rate cut day on the 7th of November, but certainly we're moving down overall. Okay, so this is basically the move. We have an internal, a trend within a trend, if you like. So if we set further lines, we could see, okay, that we have essentially lower highs. Okay, overall 1 and then 2, so block 1, block 2, and so essentially we're looking at a channel within a channel. Here, lower lows, lower highs. So certainly something to keep in mind, and good luck with trading, and hope this has been a useful video. Thanks very much and have a nice weekend. Cheers.